I'm Caoilfhionn van Walt. I am the managing partner of Regan van Rooy, and today we are talking about double taxation relief. So double tax is one of the big frustrations of doing business internationally, and this applies when two countries think you should be paying tax on the same income stream. This often arises when you, whether you're an individual or a company, are resident in one country, but you're conducting some sort of business in another country. Your home country will tax you on your global income because you're resident there, but the other country might want to tax you because they think what you're doing in their country creates a taxable nexus that gives them permission to tax. There's lots of rules around when that source country can tax. There are also exemptions that apply whereby your home country allows the source country to only tax and they will exempt the income. A good example there is where you are an individual resident in country A, but you are working in country B and you're spending most of your time there, and country B wants to tax your salary, and country A will often say, okay, well, that's fair enough. They only have to pay tax in the other country. We're not going to bother to tax it here and then give relief, so we will exempt it in this country. Where there is double taxation, often the home country will give double tax relief or foreign tax credits. It can be called by different names. And that means that while they tax you in the home country, they will give you relief to make up for the foreign tax that you have paid to ensure that you're not unduly impacted. Now, the key point to remember is that it is always the home country, i.e. the country of residence, that gives double taxation relief, never the source country. And the second point to remember is that the rules are often very, very complex. And that's because the residence country wants to make sure it's not giving up too much in giving you foreign tax credits. So it is worth getting good tax advice to ensure you are optimizing your foreign tax relief. There are generally three ways of giving foreign tax relief. The first is exemption, where the foreign income is excluded from tax in the home country altogether. That's obviously the best because then you're not paying double tax. You're only paying tax in the source country. The second method is the deduction method. So that's when your foreign tax is allowed as a deduction against your income before tax is computed. That's obviously not as beneficial because you're just expensing the tax rather than having the tax reduce your tax bill. And this can often apply when tax in the source country has been applied in a way that the home country doesn't really think is justified. A common instance of this happening in Africa is where withholding tax is levied by the source country in Africa, and the home country regards it to be in contravention of the applicable tax law, and in particular in contravention of the double taxation agreement between the two countries. Now, this often happens on withholding tax on services because most double taxation agreements only permit withholding tax to be deducted by the source country when that is covered under the double taxation agreement. And usually that only applies when the entity in the country A has what's called a permanent establishment in country B. Often African countries will just deduct the withholding tax anyway, and then the home country might say, okay, well, we're not going to give you a full credit for that tax. We will allow you to claim it as a deduction, as a normal business expense. So that's the second method. First, exemption, you don't pay tax in your home country at all. Second, deduction, you can claim the foreign tax paid as a deduction against your income as a normal business expense. The third one, and again, there are usually very complex rules around this, is a foreign tax credit, which essentially says that you calculate your tax in your home country, and then whatever your tax bill is, you can offset your foreign tax against that. Now, this is very beneficial because it reduces your home country tax significantly, and therefore there are lots of caveats and rules so that the home country makes sure you're not claiming too much. We're not going to go into the detail of that in today's newsletter, but suffice it to say, if you are suffering double taxation relief, it is always worth considering. If you are suffering double taxation, so that the same income is taxed in two countries, it is always worth looking whether your home country has a double taxation relief system, and it is worth going through those rules carefully to see if you can claim a credit to reduce your home country taxation in respect of the foreign country's tax, or worst case, a deduction. If you have any questions on this, please contact us and we'll help you with your foreign tax relief.